Hi, this is Mike Turner, and this is another Boise real estate market update. And actually, for this week, I'm focusing on a market forecast for 2012. So I'm going to start off with external influences that are affecting this Boise market. First, short sales. Short sales, are something that could increase this year. It's been a lot of talk that since the Mortgage Debt Relief Act is expiring at the end of 2012, that more and more people will decide to hurry up and do a short sale before that benefit expires at the end of 2012. Time will show if that actually happens. But right now, I can say that Ada County is down. Short sales are down about 40% compared to where they were at the peak. So there is room for it to go back up. I haven't quite seen that yet, but it could happen in 2012. Consumer confidence. Oddly enough, consumer confidence goes up in election years. I don't know why. It doesn't make that much sense to me, but historically, that is what's happened. This goes back decades and decades here in the U.S. that in election years, I think there's just so much hope that maybe something will change. There's so much discussion about it, about what people are going to do to make things better, that a consumer confidence goes up. Maybe they'll translate into housing. Interest rates. Interest rates should stay low, although they kind of popped up a little bit this week. But they should stay low through the remainder of the year. All indicators are pointing that direction. Let's hope so, because that will help keep the market strong in housing. And also job market. Everyone says that the housing market is not really going to get that much better until the job market improves. Well, I think it's going to get a little bit of support from the new construction market. If you haven't noticed, new construction in Boise is booming right now. Pending sales are way up. And hopefully that means more people going back to work, more dollars being spread out throughout this local economy. Population growth. Okay, population growth is still very good in Boise. We're well above the national average here in the Treasure Valley. So that'll keep helping this housing market improve throughout 2012. Refinancing is easier, or should start getting easier, now that this new HARP 2.0 is basically coming out, where people with negative equity in their houses are supposed to be able to refinance easier. This is going to help a lot of Boise area people because the HARP 1, I guess you could call it, the limit of negative equity you could have in your house was 25%. Well, home prices have fallen a lot more than 25% in this valley, as you know. So it didn't help a lot of people in this valley. So this new refinancing program is just now coming out here in March, and people should be able to start contacting the lenders and take advantage of this program. But let's get into the nitty-gritty of the 2012 forecast. Now, low supply. I'm seeing that because we have low supply, we're down near historical lows for this last decade of houses on the market. We just stay really low. The supply in this real estate market makes it pretty much a seller's market, and foreclosures are going away. So I think what this will mean that Boise has the ability to recover faster than most of the U.S. So watch out for that. Steady demand. Steady demand is the second point here that I want to point out, that we tend to draw more and more people to this valley because of lifestyle, because of our low prices, and this will help keep demand steady. Number 3, more construction in 2012. We're already seeing it. I was predicting it, and it's coming true. It looks good. I'm really happy about it because it means more people are going to be hired to build these homes, and buyers are pretty much being forced into it because there's not that much on the market right now. So let's see, what else? In 2012, the foreclosure impact, I think will be noticeable, but high competition will mean lower impact. So the ones that we do see come on, we've already seen this. There'll be multiple bidding wars for thefts that come on. Will push up the price. So foreclosures are already starting to dwindle, and the ones that are left, you will not be able to get the same kind of prices you were. So naturally, those prices will start to come up. Looks like we saw a price bottom for the Treasure Valley in January, April of 2011. And so far that continues to hold true. We'll see in the next couple months, make sure it doesn't slip back down. But I actually am predicting that the market home price, the median home price of homes in the Boise area will go up significantly in 2012, 7 to 9%. A lot of for these reasons I've already discussed. But what I didn't discuss this week is that the lowest priced homes in this Treasure Valley, stuff priced under 100,000, that inventory was very prevalent the last couple of years, and it's going away. So it means less people are able to purchase these lower priced homes. And so the median home price, I think, will naturally go up. Not that appreciation's happening, but the median home price will go up, and it'll look that will actually have a 7 to 9% jump, is what I'm guessing. I hope that's true. And then actually the next 2-3 years, if we'll see more of that phenomena happen, it'll appear to jump a lot more than that. 17-20%, I think, is completely possible. And if you don't agree with this is fine, because I'm definitely in the minority with this opinion. Take a look what's happened even in the last, let's see here, let me pull up one more chart for you. Here we go. And that is, this is median sales price. This chart was provided to you by Web Charts. It's a subscription service by Jerry Webb Publishing. And you can see the yellow is 2012. And right here, last month, the median home price was $139. It jumped in 1 month to $156 and change. I did the math, and in 1 month, it changed 11%. In 1 month, it went up 11%. Home prices went up 11% in 1 month. So a jump in a median home price is not that unrealistic, and especially when you take away that lower price homes in the valley. That doesn't mean that we're going to see our own homes appreciate at that rate, but the median home price is what, and you know that our industry uses the median home price to measure the health of our real estate market. And last month it did 11% jump. So I can see that this is completely possible to end the year well. We could even end the year in a double-digit gain. It's quite possible. Anyway, that's enough for today. This is Mike Turner with Front Street Brokers. If you have more questions about the market, feel free to check out our website at frontstreetbrokers.com. Until next week, have a good one, and we'll see you back soon.